Houston, Texas is the nation's leading job producer, so it probably won't surprise you to know that it's also the leading center for apartment demand. Some really good numbers. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Houston update. In recent months, we've seen a big rebound in single-family home sales, and so we've been asked a lot of late, what does this mean for the apartment sector? Will we see less demand for apartments because of so many folks going out to buy homes? And it seems like sensible logic just because, what folks leaving for home purchase would seem to have a negative effect on demand for another housing option, but our message is that's not usually the case. And in a market where you have strong job growth, a rising tide tends to boost all ships, and Houston is Exhibit A. Home sales hit a record high, an all-time best in Houston in May of 2013. More homes sold in that month than in any other month in Houston's history. 7,794 homes sold, according to the local realtors. So what effect did that have on the apartment market? Not much at all. You can see on this list here that Houston led the nation with 9,631 units absorbed in Q2 of 2013, ahead of New York, Dallas-Fort Worth, Denver, and Seattle. Now that wasn't quite an all-time high for Houston, but it was among the best performances that metro has ever seen. So demand easily outpaced new supply, which still isn't much of a factor in Houston, and so occupancy jumped 130 basis points, very big growth, taking occupancy up to 93.6%. That may not look like a great number, but it is great for Houston. It's the market's best rate since 2006, when occupancy was driven way up by demand from Hurricane Katrina evacuees. And with demand so strong, operators felt confident to push up rents. Rents jumped 1.3% quarter over quarter, and they were up 4.3% year over year. That's not quite as high as some of the hikes that we saw in 2012, but it was still among the biggest increases Houston has ever seen. This is just a market that isn't accustomed to seeing big rent growth. And that put Houston in the number 7 spot nationally among major markets, topped only by 6 metros in the west region of the country, the 3 in the Bay Area of Northern California, plus Denver, Seattle, and Portland. And you can see a couple other Texas markets on this list, Austin and Fort Worth, reflecting that strength in the economy is coming all across the Lone Star State. And let's show you what you probably already know, the big driver in the Houston demand numbers. Lots of job growth, 91,600 jobs added annually, best in the country, although Dallas-Fort Worth would be higher if you put those two markets together. Now you can see Houston's job growth numbers have slid a bit from the 2-decade highs seen in the previous few quarters, but these are still really, really big numbers. The Houston employment pool expanded 3.4% annually, which is a very impressive clip, especially for a market this size. Now, another factor that's really boosting Houston is that while apartment construction is picking up, it's still not coming back as quickly, especially relative to what we've seen in other Texas markets like Austin and DFW. Let's put a chart on the screen showing ongoing construction in Houston versus Dallas-Fort Worth. And this is interesting because you can see that prior to the recession, Houston typically saw more construction than did DFW. But in this cycle, construction surged far faster and higher in DFW. And you can see DFW is already back up to decade highs in construction, while Houston is far from it. And that's particularly because we aren't seeing a lot of suburban development yet in Houston, mostly a very urban focus. Now, we do expect that to change. Construction will pick up again, and this gap will narrow, but this is one reason why Houston has done so well, and DFW has also done well, I should mention, but certainly not quite in line to what Houston has done, and part of that story is simply supply. And because supply will still be less of a factor in Houston than it will be in Dallas and in Austin, we expect Houston to be the top performer in Texas in terms of revenue growth in the next year. We're expecting that occupancy holds in the mid-93s and that rents climb another 3.7% year over year. And that wraps us up for Houston. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.